a lot of people talk about like this chain has a great experience, that chain has a great experience, or this chain has a terrible experience.
There's a world where I don't even need a bank account to spend my money on chain in the real world in the future.
Polygon as a chain is a place that enables you to create a great experience. If you care to create a great experience, and if you don't, that's probably all you need.
Welcome back to the Rollup.
This is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
All right, Marc is here. Welcome to the Money Moves Fast episode 1. Marc, it is the inaugural episode of this show. Great to have you.
Yeah, great to be here. I'm pumped about the show. It's going to be a fun one.
I'm calling it our premiere show for RWAs, payments, and tokenization. I'd like to just give you the opening remarks here for your just high-profile bird's-eye view of the evolution of the space. I just had Ellie on. We were talking about how really the unsexy parts of crypto are now becoming the most important things in the space, and I truly believe that that is where we are today. So, Marc, maybe just some opening remarks to kick this show off. First episode, from your perspective, let's just understand Polygon's position in payments in RWAs, your understanding, your view, and then we can get into some of the nitty gritty, man. Thanks for coming.
Yeah, no, thanks. I'm excited about it. So look, the way that I see this is that if we actually looked at like RWAs, it's something that we've known for so long that they were going to be impactful. And we saw that early on with stablecoins actually being impactful early on. Right? I think like some people define like stablecoins as RWAs, some don't. But from my perspective, they're real world assets that exist on chain. And so they fall into that category. And stablecoins is the first thing that actually found product market fit. The rest of RWAs though, like really hasn't until more recently gotten kind of the attention that I think it deserves. On the Polygon side, like whether it's stablecoins or other real world assets, it's something that we've been focused on for years. Like the days when everybody else kind of fell off from like, hey, RWAs don't matter, we still had a team working on them. And same thing when it comes to stablecoins. And this is like why when you look today at like where stablecoins are at and where other RWAs are at on Polygon, you see like a very big head start there. And this kind of ties into like this idea of like why Polygon is so focused on them, right? If you kind of go into like what you were originally saying, if you go to this idea of, we've been talking about like the kind of like trenches, I think some of the kind of like deeper guts of crypto for a while. I think now we're at the point where like those guts are well built out. And I think that is something that we don't really need to kind of like build it out in the same way anymore. Like I think that they're, very, very well established now. And so really what we're talking about now is actually bringing things that people are using. And the thing is, when you think of what that if you really center on like users, right? The idea that like you're going to have a blockchain that is going to serve users for payments purposes, and then you're also going to serve them for DePIN, and then you're also going to serve them for DeFi. To me, this is like totally ridiculous. And the simple reason is because like different block spaces, different use cases have different needs, and therefore there's people say, well, you're just going to optimize blockchains anyway, so just optimize them for every use case. The thing that's like ignored there is, first of all, gaming doesn't need the same thing. Let's just give an example, right? Payments, you actually want sub-second truth finality for payments. For gaming, you literally don't care if it takes 5 seconds to reach finality, but you do care about sub-second like pre-confirmations. Okay, so that alone is an example of like why you don't need a blockchain that does both. Now you can make the argument, why not just build a blockchain for gaming that does the same thing? Like, why does it hurt? And the answer is, well, because it's going to be more expensive to run. And so like, why would you build something more expensive than what you actually need? That is just like on the block space level. Once you go like one level up from that, now you're talking about like all the tooling. And people say, well, yeah, but you can just build the tooling. But wait, I'm on a blockchain. Okay, but who's going to build better tooling? The team that is building tooling for payments, for DePIN, for DeFi, for other RWAs, or for gaming, or is it the team that's only building tooling and everything around it for payments? It's pretty obvious who's going to develop something that is actually more in demand. So this is like just a long way of saying like how Polygon kind of like has always frankly been in the trenches when it comes to building the guts, but then also stablecoins and other RWAs, but also on like why it is that we've started actually focusing so much on payments is because there's demand there, and you actually need a blockchain that kind of fills that need in a very specific way.
Yeah, Mark. I mean, I had Nikhil, who's the CTO of Circle's Arc chain, on, and I asked him why build Arc as an L1 rather than an L2. And your finality point was essentially exactly what he mentioned, and that just becomes an very important part. And so when it comes to Polygon, right, you guys want to be kind of this default payment network for crypto, boasting. I mean, the show is called Money Moves Fast, but if we wanted to make it really true, it'd be called Money Moves basically damn free, because you guys have some of the lowest fees in all of the space for just transaction sends. How do you make this vision for becoming this default payment network real when we've seen a lot of these kind of payment chains come and go? We've seen enterprise chains come and go. There's been a lot of failures. How does Polygon kind of make this a real real long-lasting thing?
Yeah, I think it's a good question. So look, I think when you look at like what chains have like come and gone, I don't think there's actually been much from like a payments perspective that has come and gone. I think there's been very little that has come actually in the first place when it comes to payments. You're obviously seeing this like way more now with like Tempo and Arc and Corex and Plasma and so on and so forth. But when you actually look at like what has existed, sector-specific chains haven't really existed other than gaming. Gaming was actually very early here, surprisingly, but like no other really real vertical. And so now what we're talking about is taking the one product that actually has tremendous product market fit in the space, being payments, and saying, let's create blockchain specific for it. And I don't think that's been tested out at all, frankly, until now. And so I think that right now it's a wide open space to be taken. Like when we look at it from like the Polygon side of things, you basically have to divide things into like two different worlds. One is which like is existing incumbents coming into crypto, and the other one is like crypto natives trying to know that. And I think Polygon is like incredibly well positioned regardless of which one it is, right? Because if you're talking about like incumbents, you're basically talking about people who have built entire payment stacks that are off-chain first. Now they need to come and rebuild their stacks to be like on-chain native and all their flows. This is not an easy thing to do when you've spent 10, 15, 20 years like building all of that out. And so we see like giants that have huge distribution that are going to come in, and like people name like Stripe. That's just one. You can be so many. But the thing is, they have a lot that they need to rebuild and like rethink how they actually do things and destroy existing parts of their business, right? Like, you take 80% of incumbents' business and you replace it with just the blockchain, and it's done, and there's really 20% left. So what's easier to replace? The 20% that needs to get built or the 80% that you need to replace? And I'd argue that 20% is much easier. And then when it comes to like new players, from my perspective, you've got a lot of people that have almost no infrastructure on their chain yet, almost no assets on their chain yet, almost no actual users on their chain yet. And then you go and you compare that to Polygon that has fintechs in almost every single region in the world already doing tens of millions of dollars, hundreds of millions of dollars of transaction volumes a month. And it feels like we're in a frankly pretty darn good spot on the Polygon side of things, with frankly only an acceleration going on.
Man, I mean, you guys also just took one from the playbook of you were saying there's kind of incumbents and then crypto natives. What you guys have done is build this thing from the ground up, and then recently have just hired Stripe's head of crypto, John Egan, and basically come in and build out some more of the payments product suite on Polygon. That is basically taking the expertise of somebody from that world and bringing it into the let's just call it crypto native world. Maybe talk to us a bit about that hire, a bit about why that was important for you guys, and what John is going to bring to the team.
Yeah. So look, one thing that's like unique about Polygon is we have long history of actually focusing on things that matter in the space, like, right. And sometimes like people look at that and say, well, it doesn't have like an on-chain impact immediately, this or that. And some of that's true, right? I don't think this is true of payments at all, but some of that's true. But what we did learn is like, we've learned from like trial and error and like the people that you want to hire and bring those in and how you actually grow. And when you look at somebody like John, a couple of things are like unique. First of all, is he's very like crypto first. Look, that's like the perspective that he has. He doesn't come at it from a like TradFi or like just traditional payments perspective. He just happens to have a significant amount of that of knowledge. The second thing is, and this is like kind of like the more boring thing for people. It's just like, it actually just comes down to like hiring just amazing people. Forget like their expertise. And like, if you talk to John for 5 minutes, forget like if he knows payments or not. I don't even care. The dude's like amazing when it comes to product and how he thinks about product and users, and that user centricity that we missed is just a huge, I think, bonus. Now, when you combine those big parts and you're like, okay, guy understands crypto and payments, and he actually just knows how to focus on users and what they need. Now you've got the makings of somebody who's going to be like, okay, here's the things that, the open spaces right now in payments that can be attacked. And let's do it from like a very user-centric perspective rather than just, a very often crypto-centric of like, let's just build something to build it. It's like, no, let's actually build what people need. And so, yeah, that's why, like, I think everyone on our team, like everyone within like 5 minutes of talking in comms, like, oh, this is like the most no-brainer hire possible.
I saw a post from a entrepreneur was like, as a founder, I think it was Naval, the only two things that you cannot outsource are hiring and your product vision. And it sounds like you did not outsource the hiring part here. You mentioned some of the kind of payment chains that are yet to be created or yet to be launched. And there's kind of this whole new wave coming of these stablecoin specific networks. And you touched on it again, but I just want to give you another chance to further solidify your stance. Are you seeing these as purely competition? Are they going to drive more volume into the space at large, into Polygon? Stablecoins are likely to hit multi-trillion-dollar in total supply, let's say over the next 2 years. How do you kind of see these networks playing out? And then maybe just more broadly, how you see stablecoin velocity and liquidity on Polygon evolving in comparison to some of these others?
A year ago, when we started talking about like, hey, every chain is going to need to be specific to something, and like, where is it Polygon, and started analyzing it and realizing we're already really strong on payments, we started talking about, like, do we really want to go compete on payments? Because like, it is one of the most competitive things that you can do. But there's a few things that are really important, which is like, yes, everyone is competition. I think it's ridiculous when people try to like keep things not as competition. It is. That's just the reality. But when it comes to payments, you're going to have like 20 winners, like if not more. And it depends on how you define a winner. But you're going to have several $100 billion, market cap tokens associated with payments. You're going to have several $50 billion market cap, several $20 billion market cap. There's a lot of wins to be had in payments, like across the board. And so I think that everyone has a chance of doing very, very well right now. And so that's not something that I worry about too much. Now, I do think that it does require you to think through, like, what's the landscape going to look like? Like, how are they going to attack it? And, my guess, because this is how markets work in general, is everyone's building these like vertical specific blockchains. So for us, payments. But the funny thing is, what's going to happen in 5 years from now is you're going to be dominating. Hopefully we're dominating in payments in general. And somebody's going to come and they're going to build something that is just niched down within payments, some subsector of payments. And then somebody else is going to attack another sector of payments, because that's just how things work. You just niche down and niche down. And if you look at the internet right now, it's like there's multi-billion-dollar companies being built in these tiny niches. Like, one of the things that I think about most, it's completely random, has nothing to do with crypto, is like some like blogs. Sometimes these like blogs on like a hiking blog gets created. And it's like $100 million company that like just builds a blog and then starts selling like some hiking specific products, right? And the truth is, like, people get to know them for that, and then suddenly they eat up a huge portion of the market. So I think it'd be like crazy not to think that the same thing is going to play out here. And so I think more than anything, it's trying to understand, like, okay, we build something out really great here in payments as a whole, but where is it that we're going to have to like really find some stickiness, some network effects that's going to be really hard to disrupt when somebody wants to go after a portion of that down the road. So I think that's like kind of like the fun part of thinking through what that competition is going to look like. In terms of right now that you were touching on, like we hit $3 billion of stablecoins on Polygon POS, which I think is pretty solid. I often think of TVL as this target that people look at, and it's such an irrelevant target for many reasons. And I take the Polygon for like a really good, like as a good example, which is like, if we're trying to build a payments focused chain and most of the TVL is going to be in stablecoins, we should look at that stablecoin TVL. And we shouldn't just look at general TVL, because bottom line is, if you hold ETH within your chain and people are supposed to use ETH, when that number 5x's, then your TVL 5x's. That's not what happens with stablecoins. And so instead, when it comes to stablecoins, we try to like look at things like velocity, right? So on Polygon, like stablecoins have higher velocity than velocity of money in the US economy. Like that is something that is good. That means it's probably more useful and people have more to do with it. You look at like where the flows are, right? And so we look a lot at like the LATAM flows that we're very, very strong on, and some of like the specific corridors where you see a lot of transactions happening. And so those start becoming a lot more relevant than like the broad numbers that we like often talk about in crypto.
I completely agree. I mean, I think TVO was like last cycle's, metric, and I think there's a lot of other important ones. And just kind of broadly, when you're thinking about the landscape, I had Circle CEO on earlier today, speaking about their entrance into hyperliquid ecosystem and all of that jazz that happened last week, right? And he compared the current landscape to some of the early mobile app era days, as well as Apple TV and Netflix. And his thing was like, we want to get USDC like Netflix is trying to be on every device. You can get Netflix on your laptop, your iPad, your phone, your smart TV. We want USDC to be everywhere. That was one thing. But then when it was actually coming down to thinking about how these chains are going to interact, he was like, look, man, Apple TV used to just be on Apple. That was the only way to watch it. Now you can watch Apple TV on your Samsung TV. You can watch it on your PC. You can use Google Chrome on Samsung. You can use Google Chrome on Apple. Like, these things are all going to come together and blend in. And actually, it's really refreshing to hear both of your takes on this, because they're quite similar, which is that it's really just like a grow the pie, blue ocean type of mentality, right? And I mean, look, you guys have already pioneered quite a bit, Stripe, Reliance, Geo. There's others that are live on Polygon that I know that are coming up really soon that you guys are super excited about. Maybe you can talk to us a bit about this kind of grow the pie mentality when it comes to working with enterprises. What are some of the next big enterprise milestones that would really cement Polygon's positioning and status as the payment chain? I don't know if you can drop all the alpha, but what are some of those milestones that you're looking for?
So I think of it more from like a holistic perspective. So like a few things that I think are really important to like think of like completeness, right? So one thing I think about is like stablecoin diversity. Like, how diverse is the stablecoin ecosystem, right? We've got 51 stablecoins on Polygon POS. And then you think about the diversity of currencies. That's those 51 stablecoins are in 16 different currencies that end up being able to be used. So those two things are important. Then you think about like where the on and off ramps are. You've got on and off ramps in almost every single major country in the world. So people can on and off ramp anywhere. Then you think of like fintechs who are actually distribution engines for this. And we talked about this earlier, but like you've got fintechs in every major region of the world on Polygon. And very rarely do you see a fintech that's actually on a chain and that is not on Polygon. I frankly can't even think of one, but I can think of some that are on Polygon or coming to Polygon that are not elsewhere. Just not going to drop that alpha for you here. And then So that part's nice, but then the missing part that I think is very relevant is I'll call them just general enterprises, like non-institutional enterprises. That's something that we will have more early next month on, is one very, very big enterprise coming in and starting to do those payments, right? So you hear the examples of like SpaceX using them for different things. I think payroll providers is another one. So really getting that complete ecosystem to end up using Polygon. I think we've got many, many pieces of it. I want to see all pieces touching it. And most of that focus is going to still be on like cross-border, right? Like if I think of the value add, I give this example all the time. Like if we were to go to dinner, Andy, somewhere in the US, and you were to say like, send me USDC, I would like beg you to just Venmo you, to like, please, like, don't make me do this. But if my family in Canada asks me to send them money, I like beg them to send them crypto. I'm like, please don't make me send you like fiat money. And that divergence is like actually very real, because it is much easier across borders. And so that's definitely like an area that is really up for grabs still today, that needs to be up for grabs. But I think that when we fast forward, 2 years, 3 years from now, why wouldn't Venmo just underneath the hood actually just be using, Polygon? So there's no reason for them not to. And so you'll get to a point where I think those domestic payments are actually happening, like on Polygon POS on the chain. It's just users don't even know that that's actually what's happening. And that's when you start getting like something that's really, truly complete, and network effects start really getting built when it's that ingrained into a system.
Introducing Extended exclusively on Starknet, a next-gen perps trading platform live today. With 50-plus trading pairs from crypto to TradFi, you get the best experience on-chain today. Deposit in the community vault for attractive returns, EMV compatible, and engage in unified margin spot trading, lending, and perps trading. Yeah, let me pick your mind on if you think there will be a future where you guys have the right setup such that users can access point of sale systems and interact. Like, so let's say I have a Polygon account on Polygon POS chain. I want to go spend money at, I had a Panera Bread sandwich for lunch today. If there's a crypto or a Polygon, associated card, and that is able to transact on the Visa network, basically what I'm getting at is there's a world where I don't even need a bank account to spend my money on chain in the real world in the future. And I know that teams are working on this. That's why these corporate chains are coming up, and they've got these pieces put together. But like, is that a reality that you see possible for Polygon in the future, where users on Polygon POS will be able to spend stablecoins that they have in their accounts in the real world in mass? Like how real is that? How far away are we from that?
It's been announced yet, so I'm not going to say it. But let's say that maybe the biggest payments processor in the world and point of sale provider, at least in the US, has integrated Polygon and can currently be used. And so, yeah, 100%, like underneath the hood, people can go ahead and pay for stuff in crypto. And so, yes, I'm very, very excited about that one.
Very cool. Okay, cool. All right, cool. So yeah, I mean, that is a vision that got me excited, right? Because it's like the like stable coins are great, and the payments for like using a crypto card that like I have like an EtherFi card and like a crypto.com card, and it works, it's cool, but it's still like, okay, do that and then pay the fee to sell the crypto, and then you just spend the dollars or whatever. But it's not like it's not fully removing the system. And so I think we're getting there slowly but surely. And on that note, I mean, you mentioned some of the technical work that is being done and that is needed for these specific use case chains, which I think that we've been a big proponent of at the Rollup over the last 18 months. Just, generally these niche specific type of idea chains will likely win, whether it's a market segment, a specific use case. The technical creation to get there is what matters. And so I'm curious, you guys already have like sub 4-second finality. You have some upgrades coming, but like when you're looking to establish Polygon or just generally a chain as a payments chain specifically, what are the technical requirements that you guys have built already? And what are you guys looking to achieve in the future from the tech side that will help you to support your partners and the teams that you're working with now? Because I assume that, you know, these big payment processors, Stripe, these big institutions, you know, they require a little bit of a different maybe setup than, you know, the average folk like myself, you know, in the DeFi world. Just generally speaking, what is the tech stuff that you need to, or that you have done and that you need to do to help get to this payments chain vision?
Yeah, so I think the first one that you touched on is really that ability to have finality like very, very quickly. It's being able to you know, ultimately like sub-second finality, but like really once you get under sub-second, you can start relying on pre-confirmations to make it even shorter, right? That you can get to 200 millisecond, 100 millisecond like confirmations, which is frankly like faster than using my credit card today, right? Like if I use my credit card today, it takes much longer than that for me to actually feel like there's like real finality there. And so I think that's like a very, very big part of it. There's other like specific things that you'd want to see. So for example, like privacy. There's no doubt, I mean, people have been talking about privacy in crypto for so long, and most of that privacy has been demonized. But I think we're getting to the point where you're going to actually have to see privacy. And we are talking to a few large enterprises that are like, hey, we're going to start, you know, doing XYZ type payments, and we need a privacy solution. And they're going to demand it. Now, that doesn't mean you're talking about like a Tornado Cash style mixer. Like I can guarantee you the solution is going to look different from that, because nobody's going to go ahead and take that kind of risk in crypto anymore. But you're going to need to see that kind of solution. I think you're going to need to see some of like the kind of like more simple things that you have in the payments world today. So like dealing with chargebacks, for example, it's something that's going to like need to be done in like when thinking about like a payments related chain. I definitely think we're going to see like a massive growth in just agentic payments in general. And so you're going to need to build that infrastructure. Like kudos to Coinbase around like X402 and the work that they've done there. I think that's fantastic. And frankly, Polygon's been doing a lot of work around agentic payments there as well. So very excited about that. Those are some of the things, but like I'd say that more importantly, frankly, than these are some like core like blockchain related stuff that you need. But I actually think the more important thing is like how seamless of an experience you can give to the users who want to use it. It's like, okay, so you get these basic requirements. Then like, frankly, I think every blockchain is going to get to like any payments blockchain is going to get to those basic requirements within a year. I mean, frankly, every blockchain that is like building towards a specific purpose is going to look the same within 2 years. Right? Like every general purpose chain is converging to the exact same design, right? There's nothing like new from that perspective. And so I think that's true. Like where there's real differentiation is going to be like that kind of like, I'll call it like where off-chain meets on-chain components and like what that experience is like, right? I think like the smoothness of like off-ramps and on-ramps and like how integrated those end up being with other products that you're offering, I think ends up being like a very, very important piece of it. Like wallet products and like treasury management around those wallet products, I think ends up being really, really important. So that kind of bit, you can rely on like third parties to build it and integrate it into your chain, which is what a general purpose chain is going to do. Or if you're more payments focused, you're going to build a lot of that. I'll give like one really interesting thing that we've started thinking about differently is we used to give like a lot of grants for people to like build stuff, because you're like, hey, we'll give a grant and then you can like build some piece of infrastructure around like Polygon, and like that's how, you know, Ethereum did it originally. It's how everyone does it. But the thing that happens in like a multi-chain world now is you get that grant, and within 6 months, they've spent that money to build out what they need on your chain. And then they go on the back of the money you gave them as a grant, and they go and give it to every other chain. And if it's not 6 months, it's a year. But like they're in the business of making money, and like that's okay. Any smart person's going to agree to like exclusively build something for you for 6 months, 12 months if you really, really need it. But eventually they're going to bring it elsewhere. And that's definitely one thing that we are really going to. Like, we will be building much more in-house than we have historically, because frankly, I don't need every competitor using the exact same product that I funded. Like, I'm going to keep that for myself. And so I think we'll see like a set of like open source, on-chain infrastructure that will continue to build open source. And there's going to be more like closed source things that we end up building that ultimately are things that we don't need competitors getting their hands on.
Interesting. Yeah, I mean, I think on the technical side of things, the key point on privacy, I think, is going to go a long way. We don't really have a chain that is high throughput, extremely easy to use, and cheap and private. Doesn't exist today. I mean, Zcash and Monero are like the closest things to it. I'm not asking for us to turn Polygon into a FBI experiment here, but I think that there is going to be a lot of demand for that first one, and then like that is like, I would not use a public chain for payments consistently right now, because any blockchain sleuth will just be able to sort that all the way back to all of the other addresses that are associated with. That's an easy one. The Finality one, yeah.
Being on chain nowadays to me is like incredibly annoying. Like, to be frank, because I personally look, some people like, no offense, like they like their .ets and they like everyone knowing everything they do, and they're like, here's a public block. But I don't care for anyone to know anything that I do. And what that means,
I know.
Single time I do something on chain, I have to go through a centralized exchange to onboard new assets onto that exchange so that nobody knows that that's mine. I can't do it from a wallet that I think somebody will track. It's like, these things are really freaking good, and they will figure out it's mine. And that is like a horrible experience every time to need to go through a centralized exchange to do anything. Like, I don't need to have like 75, 80 wallets, 100 wallets. It's like ridiculous. And so I can't wait for the day where we have privacy. And look, the good thing is there are new chains focused on that will be entirely for that. And there is a use case for that. Like, Polygon Mayden is what we spun off. It's now just Mayden. Like, that is a chain that is very much built for scaling, but through privacy. And I think there's going to be like a awesome use case for something like Mayden. And so I think that you're going to have chains that like are ultimately going to be by default transparent, but you will have privacy, and there will be others that by default will be private. And most likely you'll be able to actually have transparency there if you want as well.
But you agree that from the payments perspective, privacy is a non-negotiable.
Yeah, gotcha. Cool. Now, kind of zooming out into the broader Polygon POS landscape, as we've kind of drilled down on the payment side. The one application in crypto that is probably the most prominent application in all of crypto, Polymarket, has been absolutely exploding in usage on Polygon. And when you use that app, you don't really realize that it's on Polygon, and you don't really realize that you're even really doing crypto as much. I'm curious, from on the consumer side, how does the Polymarket success, how do you attribute that to Polygon's stack? Is it about consumers actually caring about speed and cost? Is it more about culture and just a good product market fit? Maybe you can explain to us a bit about the consumer side of Polygon as it relates to the payments vision.
I think about it is like, apps define the experience on a chain. So a lot of people talk about like, this chain has a great experience, that chain has a great experience, or this chain has a terrible experience. And every time that I go and I like ask like, hey, what was the experience? They'll point me to an app, which makes sense, by the way. And the app is defining the experience. So I'll hear people say Polygon POS has a bad experience. And I'll be like, well, have you used Polymarket? Because that's clearly not the case, which tells you that Polygon as a chain is a place that enables you to create a great experience if you care to create a great experience. And if you don't, that's probably on you. It's just like the reality of it. And Polymarket, Shane is just so obsessed with like users and the user experience. And that's why he's actually care to create that experience. And so, yeah, I think there is the baseline basic things that you need to be fast, you need to be cheap. Like those are like baseline, but after that, it's also, do you have the tooling that they need so that they can actually create that experience that they want? And then you just need good devs, like good app devs who can then create that good experience on it. So I think there's like a baseline thing that Polygon that we've done that makes the chain like easy to use, but then the credit goes to like the apps that, in this case, like Polymarket, I'm just creating like an awesome user experience that like really, hides anything related to a chain, which is exactly how it should be.
And then you guys have this Rio upgrade coming that's live on testnet. I think the mainnet is expected next month. This should even further help the native application ecosystem and just further fundamentally improve Polygon's ability to be a payments first chain. Is there any kind of like metrics internally that you can share, or like what you can expect the tangible difference to be? What is in that upgrade? How is this going to help your vision?
Yeah. I think the biggest thing, like when you actually look at like Polygon POS, like the one issue that Polygon historically has had is like these reorgs that happen every once in a while. And this upgrade is one that is going to completely eliminate them. They're really be completely out of existence at that point in time, which will be awesome. It's obviously like super important for payments. And so that's one of them. It's bringing block times down to 1 second, which I think is again, like very, very important. The bringing TPS up from 1K to 5K. This is nice. Like what we see with blockchains. So in most businesses, one thing that's unique is you kind of like look at demand and then you increase supply based off of that demand. And one thing that's like I think different in a newer technology is that if you actually don't increase demand before supply, before there is actually demand for it, what ends up happening is the demand doesn't necessarily come because they don't trust that it'll be there. And we've had conversations with enterprises that say, hey, we're not shipping this on Polygon yet because we're not sure that you'll be able to handle it. And we're like, well, bring it and we'll handle it. Like we'll just, and the answer is actually easier, which is just go ahead and increase the supply. They see that the supply is available and they come in with the demand. And so that's really what, a lot of this is to completely eliminate reorgs for a while and increase that TPS. We've got 1,000 TPS right now, and that's like real TPS. So we've actually seen that on chain. It's not just like a number. And so we'll get to 5K TPS, which will be a very, very real TPS. Those are like some of the key like chain specific upgrades that we have coming.
Beautiful. Marc, zooming out of Polygon, zooming out of payments directly more into this RWA tokenization payments realm here, this is by and large the biggest opportunity in the space right now for everybody involved. It is the most impactful. It is going to change the fundamental way that finance exists in our world. When you personally are stepping into work each day, right? You're running the show at Polygon. You're part of this kind of transition period of time where I think you and I will look back in 10 years and be like, we were there when we were onboarding, Stripe on the Polygon. You mentioned this huge payment processor, right? In this moment of time, what have you been really kind of noticing about the industry, noticing about the company? What have been your like key, just like takeaways broadly about how this is progressing? Perhaps it is like you thought it was, or it's not. Some things are going faster or slower than others, or generally like what you've been right or wrong about. Quite open-ended here, but this is happening. It's happening fast. It's in your face, and it's a battle right now between effectively, people to go into these institutions, these larger players who don't really understand the space that well, but they need to be educated and then effectively convinced of your value and of your integrity and of your trust, and then eventually adopted. And this is happening everywhere. And so, yeah, just open-ended here to kind of close us out. Talk to me a bit about this progression and how you're seeing it from your viewpoint.
Yeah, I think weirdly enough, like the biggest differentiator from my perspective that we're going to see is it all comes down to like the teams that you've built. And that's like, again, like the boring answer, but that's just like the reality. Like one thing that I'm obsessed with that Polygon is like bringing in just like amazing people that you can hire. Like we talked about like John coming over from Stripe, but it's not the only one. Like we've got early bridge employees or like checkout employees. Like it is about like just bringing in like really, really good people. They're the ones who are ultimately have the relationships, and they also understand what people actually need, which ends up being really, really important. And because they understand what people need, they also know how to like present that to them in a certain way. So I think that's one part of it. The other part of it, it's like this cliche of like thinking from first principles. So, you know, people are talking about like sector specific chains now. I mean, a year and a half ago, I just sat down and I just sat there and I thought, where's this space going? And it's pretty simple when you just sit there and you just break things down and say, okay, cool. So we have these chains that do everything, and they are pretty good at all those things. They're great at none of them. What's like the next thing that's going to happen? And most that you can jump to like app specific chains. I think a lot of that was because when it comes to like DeFi, you know, like gas requirements are a lot higher and demand was very high. So people thought like, oh, you can skip to like these application specific needs. But that didn't like actually really make sense because there's too little demand for that to actually make sense. The thing that you're going to want is something slightly more specific, right? And so that again gets down to like these sector specific chains that allows you to build more specific to those needs. But then what you need to think, and which I was touching on before, is like, where are things going to go next? And the important thing is like navigating them, not figuring it out. I actually think that if you spend the time, you should be able to figure out what I was saying earlier, which is that like a sector specific chain is just step one, because it's going to end up happening is you're going to have payments chains just booming all over the place. And somebody else is going to sit down and think, okay, how do I beat them? And they're going to realize that if they do the same thing, they're going to lose. And so what they're going to ask themselves is, what is it that I can do differently? Like, where is it there is a gap where I could build something more specific that's going to be better? And then they're going to go build that thing. And then eventually what's going to happen is we're going to get to the point where that specific area is going to get incredibly saturated. And companies are going to get big enough in terms of like what they have on chain that then you'll finally get to app specific chains or like company specific chains. But like, I think we're like 6, 7, 8 years out from that because you need so much actual volume coming. But that ends up actually being like the end state that is real. And in that state is where something like the ag layer that we're building at Polygon from an interop perspective, which from my perspective is what allows all of this to be true. Like you can't build sector specific chains without great interoperability, and why you need something like the ag layer and why it matters to us. And so you're going to end up having this idea of like we've talked about, like what are we going to do when Polygon POS's block space fills up? Because like some people think their chain's block space will never fill up. I don't think they're bullish enough, or they live in la la land as to like what's going to happen. The reality is that block space is going to fill up, and what we need to be able to do is actually seamlessly spin up another chain with the same dynamics and allow people to then use either of those chains in like a seamless way. And that's much, much, much further out, but it's something that you need to start thinking about today. And so, yeah, I think like, really like, I think the interesting thing about this space is it's like so new, there's so much evolution still to come, but I think there's a lot that if you think from first principles, you can start solving for.
Marc Boiron, CEO at Polygon Labs. Thank you for the first episode of Money Moves Fast. This show is going to be a journey into different financial institutions, fintechs, institutional leaders in payments, in RWAs and tokenization. Looking forward to putting the rest of this on. We've got an amazing several months ahead, turning this show into one of our core pillars at the Rollup TV on our stream. Thank you, Marc, and I appreciate your insights, and really looking forward to the future of these unsexy, albeit the most important use cases of the space, man. Thank you.
Thanks for having me.
All righty, Marc. See you soon, man.